Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Shreve here with a breakdown of the action in today's session, where we saw the Nasdaq soar ahead of the jobs report. So coming back up to some key levels, Ken.
Yes, indeed. The question is, are we still on a downtrend or not? We'll have to talk about that. But we did find three stocks to talk about. One reason tech stocks were in such a good mood today. Qualcomm, nice gap up. Bullish earnings report. Also want to take a look at the healthcare space, ResMed, RMD. And finally, in the oil and gas space, Technip FMC, which is ticker FTI.
Okay, well, we're going to take a look at those three stocks, but first let's analyze the major indexes. The Nasdaq today up 1.5%, while the S&P 500 was up 0.9% today. Same for the Dow, up almost 0.9%, and the Russell 2000, which tracks small caps, up about 1.6%, getting back above that 2,000 level. But a lot of focus today, Ken, was on the Nasdaq Composite, the tech heavy index here, with a strong gain to finish the day.
Yeah, no doubt about it. Both the Nasdaq and the S&P 500 closed up near their session highs. You can see it was a kind of a tough volume comparison to Wednesday, where we saw pretty heavy volume after the Fed, especially during the final half hour of trading. So we got lower volume, and where does that leave us? Well, indexes are still on a downtrend here, and as we talked about yesterday, it's still trying to work its way back and start a new uptrend here, but it's still below the 16,000 level, and it is still below its 50-day moving average. So from a technical perspective, this is quite a challenge, not only for the Nasdaq but the S&P 500. If we get a good wave of institutional buying and we see institutions come in from the sidelines, we start to see volume expand. We see the Nasdaq move nicely above the 16,000 level. We can feel a little better about maybe a nice little uptrend here. But right now, risk still seems to be, kind of tilted out of investors' favor. But we do have a very important jobs report tomorrow, and it's an important enough report that the market could react positively to it, and maybe we could get that breakout tomorrow. We'll have to see.
Yeah, we will have to see. That's exactly what I was going to ask you about, Ken, because even though we already had Powell speak, Fed Chair Powell, that is, but sometimes foul balls hit, right? I don't know. I'm just trying to come up with something for my word combination there. But anyway, he already spoke earlier this week, but as our team has been noting, he relies, and the Federal Reserve, they're relying a lot on the underlying economic data. So that makes this jobs report very important. And we do have a breakdown of why the market looks at the jobs report, what numbers you can see in there, what that signals about the health of the economy. You can check that out in our video center at investors.com/videos or our YouTube channel. So we'll be keeping an eye on these key levels, Ken, on the Nasdaq. And what about for the S&P? What levels are you watching?
Yeah, really. The fact that it's holding above 5,000 is definitely a positive. But again, still below the 50-day moving average. Trying to rally here, but it really has just what we call a little overhead supply to work through, and it just needs to get above the 50-day moving average. That would break it out of its downtrend. So we'll see. The economy is expected to create 243,000 jobs tomorrow. That's going to be lower than what they saw the prior month. It was just north of 300,000. But as I've been talking about, the Fed has really been looking for some softness and weakness in the labor market, because if it gets that will help them, get their PCE indicator down closer to 2%. If you've got a lot of people working and you've got wage growth, it's not easy to keep prices down when people are buying and people are working. So maybe we get some softness tomorrow. It has been, it just seems month after month there's been a really strong jobs report. So we'll see. But I think the Fed would not mind seeing a miss tomorrow, or maybe seeing some softness.
All right. Well, we'll see what we get there, because with the resistance that we've faced this weekend, I mean, if you take a look at the weekly chart here, we are bumping our head up against a flattening 10-week line. So if we get rejected here, what would that signal to you?
It would signal to me that this market needs to digest the gains a little bit more. I mean, look at the explosive move that the S&P 500 made since late October, early November from that low of 4103. I mean, it was a monster move, 25, 30% up from the lows, and now it's kind of just pulled back gently here. But indexes and individual stocks need time to digest prior uptrends, and still looks to me like the S&P 500 is in the early stages of digesting these recent gains. Doesn't mean that we can't pop higher and start a new uptrend here. But it looks like a normal pullback at this point. I don't think we've even come in 10% off our highs yet. So we'll see. It looks like an orderly pullback so far, but it was a really, really big move for the Nasdaq and the S&P 500, since early November.
It sure was. Let's take a look at the Russell 2000. Here's IWM. It looks like we are very close to being roughly around that 200 level, which corresponds with the 2000 level on the index itself. And that's been an area we've been watching all year long, haven't really been able to stay above it for very long. So we're right there too, and below the 50-day.
Yeah, well, if it's not clear at this point in technical analysis, the 50-day moving average for a stock or an index is a very important level to watch. So all of the major stock indexes that we're looking at here, need to get above the 50-day line to really feel confident about a new uptrend. And if we do get a sign of strength, I mean, the Nasdaq's percentage gain today was very powerful. We didn't get that conviction buying. We didn't get a huge rush of trading volume behind that 1.5% gain today. But if we can get some volume, some conviction, and another big percentage gain, that might be enough to lift the market out of its doldrums here.
Okay, and let's take a look at the 10-year Treasury yield, reversing a bit lower today, it looks like, by the end of the session. So if we get a little relief on the yield side, that usually is favorable for equities, but we could see some motion here tomorrow.
Yeah, no doubt. The 10-year yield will probably be volatile, and this is it was lower yesterday after the Fed, and it was up about 4 or 5 basis points early in the session, but it did reverse lower. So I think stocks took some comfort in that as well. So we'll see. The 10-year Treasury yield will probably be active tomorrow morning, depending on what the jobs number looks like.
Okay, and let's now take a look at Qualcomm. One stock that you wanted to highlight today, Ken, gapping out of a base on earnings with an RS line, blue dot underscoring the technical outperformance here. Shares gaining 9.7% by session's close in heavy volume and closing just above a round number at 180.
Yeah, buying demand stayed strong all day with Qualcomm. So when a stock gaps up, you'd like to see it hold gains, and Qualcomm did that for the most part. And this is not a major growth story right now in the market. Their handset sales only increased 1% year over year to about 6.18 billion. But as the market is trying to come out of a downtrend here, the more technical setups that you can see like this, stocks showing strength, breaking out to new highs with volume, that does bode well for a possible market uptrend here. So it's encouraging, to see a lot of stocks actually today gapping up on earnings, and Qualcomm was one of them. So a couple of highlights in this earnings report: their quarterly revenue from Chinese phone makers was up 40% year over year. So, but you can see, it's just not the growth story it once was. Doesn't mean it can't move, because it made a bullish move today. But good breakout. And again, the more type of price action we can see like this in individual stocks, the more we can feel better about maybe a nice uptrend starting here.
Yeah, no doubt. Okay, next on our list is RMD. This is ResMed. Had a nice week last week on earnings, it looks like, and it's holding tight right near highs.
Yeah, we're used to talking about Inspire Medical when we're talking about sleep apnea and that little implantable device that they have. But ResMed has been a long-time leader in the sleep apnea market. And, I really like how this stock gapped up on earnings last week, and it has just moved sideways. It hasn't given up any ground. So this is telling me that, institutions are staying tight in their positions here. Stock still looks like it's under accumulation to me. So, I mean, this is just an example of another stock showing strength and support in this market. If you get more, sideways movement underneath that earnings gap high, you could see another entry here. So I think this is an interesting one to watch. And you've got good bottom line and top line growth, and accumulation distribution rating of A-. There's a lot of things to like here about ResMed.
Yeah. All right. Thanks for flagging this one for us, Ken. And we'll round things out with a look at ticker FTI. This is Technip FMC. We're seeing this stock holding above the 10-week line, oil and gas machinery equipment.
Yes, so we've got a nice technology stock, we've got a healthcare stock, we've got a oil and gas stock. So, still seeing some, decent leadership in the market across different industry groups and sectors. And Technip is a French company. In 2016, they acquired FMC Technologies, a machinery and equipment company. So they do a lot of work in subsea, below the water, servicing oil and gas equipment. But again, fundamentals is the story here, and also strong technicals as well. Recently reported earnings, broke out of a nice consolidation here, and this is what a first good test of the 10-week moving average looks like. So this one still looks like it's in a buy zone to me. You've got big annual earnings estimates here. Return on equity is a little bit light at 6%. We usually like to see that up closer to at least 20%. But again, looking at recent earnings and sales, this is an acquisition that seems to be both companies have integrated nicely, and really nice track record of earnings and sales here.
Yeah, definitely. Okay, and it's trading about 3.7% above the 10-week line. So that's definitely a key level to look at for some support here, Ken. All
Yeah,
right.
you don't want to, when the stock is finding support at its 10-week moving average, sometimes they find support very quickly and they go, 6, 7, 8% above the 10-week line. This one is just kind of sitting right there. A nice week for the stock last week. You can see that nice up week and higher volume, and now it's just kind of biding time and, drifting sideways in light volume this week. So I think overall the fundamental and technical picture looks pretty good here.
All right. Well, thank you so much, Ken. And thanks to everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us alongside Brian Shannon, technical analysis extraordinaire, always talking about the anchored volume weighted average price and how that plays into his buy and sell decisions. So really looking forward to having Brian Shannon of alphatrends.net back on IBD Live tomorrow morning. So please join us, investors.com/IBD Live, for all the details on that. We will see you there, and then we'll also see you right back here tomorrow after the close.